The biggest mistake HR leaders can make is they build the best HR function that's really disconnected from the business itself.
Welcome to the TroopHR podcast. I'm your host, Taylor Bradley. In today's episode, we're diving deep into the world of venture capital and its intersection with HR leadership. We're joined by Rebecca Price, an experienced HR executive who has transitioned into a VC partner role at Primary Venture Partners. We'll be exploring the ins and outs of venture capital through Rebecca's unique journey from CHRO to VC operator. She'll share insights in how Primary Venture Partners supports its portfolio companies and the advice that she gives to founders. To kick off our conversation, we'll start with the basics. Rebecca will provide us with a fundamental description of what a venture capital firm is, setting the stage for our in-depth discussion.
So you can think of individuals or institutions who have money that they want to invest. Just like you invest in the stock market, you invest in real estate, you also can invest in companies. And the way to invest in companies versus a one-on-one relationship is you can take your money and give it to an investment firm like any other financial manager, and they will manage your money through investment into companies. And a VC firm is typically investing in startups. So at Primary, the institutions that are our LPs, which are limited partners, the people trusting us with their capital, you have healthcare systems, you have universities, you have city and state pension funds. They're trusting us to invest their money into our funds, and then our funds are deployed to invest into awesome founders building great companies.
And my understanding is that there are different VC groups or firms for different parts of the corporate life cycle. Could you give us some insight into that as well?
Yeah, just as you would in any job, specialize, right? So you might be a CFO, but you might be a CFO who works in a hospital, right? That's very different than being, say, a CFO of a bank. VCs have specializations as well. And you can think about specialization into industries and markets. So that you might invest into the fintech space, the healthcare space, the B2B SaaS space, or you might invest into a stage of a company, whether you're an early stage, mid stage, or growth stage. And as I say that, there's also generalist firms. You might hear that, very large VCs who invest at any stage of a company and in any industry. Very specifically at Primary, we invest in the early stage. So we lead pre-seed and seed stage rounds. We also incubate our own company, and we have 5 specializations. So our deal teams are very much focused into industries where each deal team focuses on one vertical to become experts.
So almost a spike, if you will, which is prelude into our conversation. So there's no better person to describe this article than the author herself. Would you mind giving us an overview of what your article was about?
Yeah. I never worked in venture before coming to Primary. So my background is I worked in corporate America in growing HR and talent jobs. I had the privilege to work at Johnson & Johnson in an HR rotational program. I then moved to venture in 2013, and over the course of about a decade had 3 different chief people officer jobs where I was not only building HR teams from the ground up, but also building HR teams within companies that were scaling from 0 to 1 and then from 1 to 100. And in that had to build a scaffolding to lay the foundation that people can be successful in those companies, and those people can be on teams that are actually high performing, all in service of delivering outcomes to our customers, our shareholders, and our employees. And so in that kind of the training of building strong operations at which you can have a very talent dense team, I walked into a venture firm for the first time looking around to see how does the venture firm work. And what you'll see straight out of the gate in the top of that article is most VCs will say, I am a bad people manager. And that is because you can be an excellent investor and never have to be a great leader or manager of people. You don't have to recruit great talent. You don't have to manage them. You don't have to get anyone else to perform, because your metrics, your performance is based on the returns on your investment. So financial managers generally or historically haven't been excellent people managers. And I walk into Primary, who's running a firm very differently than other VCs, because we have, when I joined, we're about 10 or 15 people. Now we're 50. And we do a lot of promoting from within. And so one of the first things I was thinking about is how can we make primary a place where people are not only clear about what their roles are, but how can they continue to grow in their roles to perform, get promoted, and be the next generation of talent. In any growing organization, you're home growing people from within. So the pieces I just said, but you're also recruiting from the outside. And when you're recruiting from the outside, you want to be very clear about what we're looking for and who those people are, and not want to just have jobs be given to people because of someone. We're really trying to dispel the paradigm that kind of you have to know people and you have to be in the network, and the only way to get a VC job is to know someone. We're trying to create diversity. We're trying not only just diversity of demographic, but diversity of thought, diversity of industry. If you look at the people who are partners at the firm, you see some people are career investors and some people are former CEO and founders and some people are operators. We love that diversity. We think it really contributes to the return on our fund. And so we're trying to set a standard to other venture folks about how you can be very clear about setting expectations on the in, bringing people in, and then helping them grow. And fortunately, like primary is a place that did this before I got there. The competency grid that is published and open source in that article was something that existed already when I joined. They didn't need a chief people officer to come in. The founders of the firm, Brad and Ben, they had created them. And we just apply it in a really robust and operationally disciplined way.
What an amazing structure to go through. One of the things that you and I chatted before we got online here today was I once asked someone that's a VC currently, how you get into the field. And the answer they gave me was you just had to have gone to an Ivy League school. So I am sure that you can dispel that myth. If someone is wanting to get into a firm like yours, let's say has been a CHRO for the past decade, what would be that first tactical step that you would recommend for them?
The steps come even before you want to get into VC, and that's the career you have, the experience you have early in your career. So think about any job, right? When you're hired into a job, you are bringing something into that job, as well as you have expectations that you'll have to learn something in that job. So the learning, you want to go somewhere where there's someone who can teach you, and you obviously demonstrate that you have the ability to learn. But what you bring into the job, you have to think about who the customers are. And so I am not an investor, to be clear. I am an operator. At primary, we have this 2-to-1 ratio of operators to investors. So our operating team is people who work inside portfolio companies once we make the investment. So I spend the majority of my time, once we make an investment into a portfolio, bringing all the practices of a chief people officer to a small team to give them outsized advantage compared to as they're competing against larger companies and competitors. There's a mirror team to what I do. We have a finance team, we have a go-to-market team. So you get an investment from primary, you pretty much have a CRO, a CHRO, and a CFO like in your back pocket. It's incredible. And so what I brought into primary was my experience being a chief people officer in startups. So that immediately when I'm working with a founder, regardless of industry, regardless of culture, regardless of that CEO's experience, I can help be an expert to lay the foundations that they need to be a company that hires people in and those people can perform. So if you're an operator looking to get into venture, I think the best thing you can do is grow your operational skill set and be one that the customer of your employment, a venture firm would really find value in. If you want to be an investor in early stage venture, if you want to work in an investment firm of an early stage company, get experience operating an early stage company. I think if you want to break into the investment side, that's where I think, and we put a lot of that in the article, you have to also think about what would those senior investors, those senior partners need and want. So ultimately, what are they trying to do? Every day is day one in their job trying to find the next best founder, the next best company. They are, once they make a great investment, they're looking for the next. So you can help them find great founders, find great investments, understand an industry, understand maybe an emerging industry or a white space of an industry. If you can bring that expertise or those relationships, you are immediately outsized as a candidate to have an advantage to be hired. And honestly, going to an Ivy League school doesn't teach you that, right? It doesn't teach you deep industry expertise. It doesn't teach you kind of being a deal connector or a relationship.
That's a great first step. which I wanted to bring us now to the competency framework. Can you give us an overview of the competencies that you've identified in your article?
I encourage people to dig in and read. If you really want to be an investor in venture, take a look through that grid. We have 7 competencies and each one breaks down into sub competencies. But I will say it's a hard job. It is not a job necessarily that I could do. You have to be on the relationship side, really good at building communities, building relationships, being a connector. You have to be an excellent researcher to be able to, in a short period of time, understand an industry, understand the sector, understand the competitive landscape. You have to be an excellent communicator because you have to be able to write memos. You need to be able to convince an investment committee why they should make that investment. And then you also have to be good at operating because then you participate in being a board member. So you have to really know how companies operate. It is such a wide swath of skill. And I think there can be a perspective that being VC is really cushy and really easy job. And people just want to get into it because it's a quick, fast way to make money. I would say to make money, it's a very high risk. It's very slow. And it is a very difficult job because on any one day, the range of context switching and competencies that you have to navigate through is pretty tough.
What's interesting in some research that we did at a prior company I worked at is the average tenure in tech was about 2.35 years in SaaS and tech, and this was in Manhattan. Your cycles and what your folks are judged on, it's much longer. Can you give us an insight onto that time span of what does success look like in VC?
Yeah. So when you're an operator, and then I'll go into investing, the reason operators last about 2 or so years is because every company is changing. You materially change on a quarterly or every 6-month basis. And so when I recruit talent into operating into companies, I'm always looking for longer periods of tenure. Like anything less than 2 years, I'm wondering like what happened, because I want to see that people saw multi-cycles of growth and change, because that's how you really learn. If you're staying at a company for 6 to 12 months, you're not seeing a lot of change. And then I'm wondering, do you have to live with the consequences of the decisions you made, right? Because it's easy to come in, do work and bounce. But if you're actually staying, implementing work and then seeing it and then and watching to learn from where you were successful and where you failed, that's where I think you get the most learning, and then the most learning leads to the most growth. But also 2 years, like the companies are usually like a triangle where there's not a ton of upward mobility, right? There's limited upward mobility. So sometimes the best way to grow your career and get promoted is to leave. Unfortunately, I don't know that I necessarily agree with that, but that's why you see that 2.5 years. Now in venture, the metrics aren't on a 6-month or annual basis. They're really you're looking at, can these companies raise their next round of funding? That is the performance milestone for any company. So if you invest in a seed stage company, we at Primary are pretty scientific around all the micro milestones that have to happen on go-to-market with getting customers, on product market fit, on talent, on your model and being capital efficient. Like we're very prescriptive around, okay, we know all these milestones have to happen on the seed to Series A journey. So that's how our operating team would work with you, and we invested in you. But the ultimate metric or confirmation of that is a Series A fund. And a Series A fundraise could happen in 12 to 18 months, or it could be longer. And if you're a Series A investor, you're going to take all those steps every day, every week on your path to see from Series A to B. But the ultimate performance metric is, can we raise our Series B? And it's not just can we raise, but it's who do we raise from and what is the multiple. So when you look at investors, that is the performance metric. Who did we invest in? Are those companies successful? Can they raise? And if they raise, at what multiple? And that multiple is the ultimate dictator of the performance.
And what's been interesting in the past 3 years, since 2020 essentially, is that it seems that multiples have gotten a little bit out of hand. What are some of the trends that you've seen when it comes to that, just a high level?
I would encourage you to ask that question to other investors who've really been in venture longer than I have. I started in venture in late 2020. So I came in at the high cycle where my colleagues and partners would say, this is crazy. And I'm thinking like, oh, okay. It feels crazy too. I'm glad you say that. We would see not only were multiples high, but a lot of new venture firms coming onto the scene out of nowhere. And we would also see deals moving really quick. Decisions having to be made in days or within a week of decision to, do we want to invest? And we're a very disciplined firm in the sense of we make 10 or 12 investments a year. So we're not doing high volume. So every investment has to be excellent. It has to be a swing that we believe would return our full fund. And we like to take the time and do research, talk to potential customers, talk to experts in the field, really write thoughtful memos, have really rigorous debate around, is this a company that we want to invest in, both the market and the product, but the founding team. We just felt like in that 2021, 2022, not only were those multiples increasing, but the pace at which we had to make decisions was so fast, and it pushed us a bit to the edge of our comfort zone. I think what we've seen in 2023, 2024 is it has slowed down a bit compared to 2021. You'd have to ask someone who's been in the field longer of, are we back to the 20 teens? But I do feel like now we have a little bit more breathing room to do the rigorous research we like to do and to get to know the founders that we invest in. And when you're investing at seed, we always talk about how it is a marriage. It is a real partnership. You have to really think, are we the right team to work together for the next 7 to 10 years? And you have to feel really good about that partnership.
For HR leaders, in a recent podcast, I was talking about this, is those valuations that are run away, they do catch up with your team. Because if you experience a down round, that's not great for morale. But if you are a public organization or you go public and all of a sudden you see a nosedive in your stock price, not going to be great for the team. Now, saying that, I'm also the eternal optimist here. I do think that there's companies right now that have seen their stocks tank. That to me is an opportunity for people to join those organizations now at those unnecessarily depressed stock prices to see potential appreciation in their overall income. So just because a stock's down doesn't mean it won't go back up, but be careful. And this key words here, due diligence applied to every stakeholder, not just VCs.
One thing, what Primary did, and I appreciate the conservatism that our partners take to our funds, is when the market started turning in 2022, 2023, we went back to each of our founders and talked to them about what runway they have, what metrics do they have, what was their previous valuation, and how would that valuation be looked at, and to help them create more runway and discipline so that they could have performance to meet and exceed the metrics that the external market would need to see, so that when they went out to raise, they were better suited. So I hope anyone who takes VC capital has partners that are helping them think through that as well. We haven't, fortunately, knock on wood, taken any down rounds, and we've done over 20 fundraisers this year. The second thing I would say, if you're, just to Taylor's point there, if you're going to take any role, you need to think about your risk appetite. So usually compensation and VC-backed startups come in two forms. You have cash, and you have your base cash, and you have your equity. Obviously, there's your benefits package, but just for the sake of this, with equity, you might be able to afford to take the risk, but other people may not. So I just think it's about your risk profile and your risk tolerance. If you want to get into an early stage startup who may have taken a down round, and what are your short and long-term career goals and how does that interact with your life?
And I've consistently said when it comes to retention, growth, and morale, there is no replacement for a well-run business. So please make sure that you're making sustainable decisions as a leader in your business. I'd like to make a quick pivot as we get toward the end here. Is not everyone may want to get into VC, but we have a lot of listeners that are working with VCs currently. When it comes to the portfolio companies you've worked with, what are some of the things that you've seen consistently where HR leaders can maybe drive better performance or more sustainable decision-making? What does that look like?
The biggest mistake HR leaders can make is they build the best HR function that's really disconnected from the business itself. So you have to think about what your stakeholders really care about. They're caring about hitting their goals, and their goals are usually anchored on three things. They're anchored on revenue target, product, and then some sort of G&A efficiency or scale. And so as the chief people officer or head of HR, you want to think about how your work enables those larger business goals. One of my favorite business books is by Patrick Lencioni. It's called The Advantage. It's about the concept of first team thinking. First team is where the most important team and the team that you are most loyal to, or your allegiance is, where your metrics draw from, is the executive team. And as the executive team, you all should have the exact same goals around delivering business outcomes. And as an HR leader, you need to think about what in my wheelhouse enables those first team metrics to be delivered. Because no one's going to care if you have the best performance review process, or you have the tightest, most rigorous compensation structure, if it is so devoid of driving business outcomes. And so I think first and foremost, for any HR leader, read that book, an excellent book, bring that first team mentality into the executive room. Think about metrics that are actually aligned around the full team being successful, with the firm being successful, and watch out for vanity metrics where it shows one team performing where another team doesn't. You all have to sink or swim together.
And that concept I've coined recently is HR drift. I feel like there's been a lot of HR drift, in particular in the past 2 to 3 years, where we're not aligning to the business. And at the recent CNBC CEO summit that I was able to attend, that was a top concern at CEO. They feel like they either don't recognize the HR function anymore, or they feel that it's become so disjointed from the business that it's not adding the value that they feel it could add. And so that HR drift can be different from every organization, but it is important to do some self-reflection of, are we aligning to the business goals? Because again, to go back to what I said before, if you aren't running a well-run business, then everything else doesn't matter because the business isn't going to succeed. Rebecca, I've specialized in working in late stage startups, and I can't tell you how many times where I've gone, I wish I would have joined the company at not for the value upside, but just to make those right decisions at the beginning. What are some of the other things that you've seen in early stage where it's just like maybe making wrong hires early on and you're going to pay for that? What other advice do you have?
Yeah, absolutely. And so my first chief people officer job was at a Series B company. I was the 75th employee, and we grew it to a few hundred. But coming from corporate America, 75 felt so small. When I left that job and considered what I wanted to do next, I was in your same boat, Taylor. I said, I actually want to go even smaller, because joining a 75-person company, my 3 years there was change management, tearing things down that were not working and then rebuilding. So I asked myself the same question: what if I got in as early as possible to help build the foundation, not process, but build the foundations for a company to efficiently scale? And I actually at Primary run this 10-week CEO cohort for all of our new CEOs to come in and learn the foundations of people leadership. That's actually the name of it. And we go through this curriculum of the absolute basics needed for any founder or CEO starting a company. And I start by saying that there's a big difference between being a founder and being a CEO. A founder is, you have an idea for a product, you're spinning a product up 0 to 1, you're getting your first customers, you're getting an investor. Being a CEO is someone who is a manager of people. And you're also a manager of money, and you're obviously articulating a large vision. But I always start from this place of, what are you designing around humans? Because to be a CEO of a scaling startup, you have to be hiring in humans and enabling them to perform and scale. And so we start out by talking, before we can talk about anyone else, we have to talk about the self. So we start off with our first session all focused around, who am I as a leader? What are my values? Where have I been my best? Where are my best partnerships? Where are my best team? How do I act under stress? How do I make decisions? And we have this entire framework around the user manual where you can ask yourself these questions around, who am I? How do I act at work? How do I act with others? And even share with people. We encourage all CEOs to share this user manual, and I've written about it. You can find it on my LinkedIn. So to give people the rule book and framework of how do you work with me. So much in relationships is experimentation. Like, I'll say something to you, Taylor, and then you'll respond, and then it'll be like, okay, that worked, that didn't work. So why not, as a CEO, just accelerate the pace at which someone can work with you? So from who am I, then you can start talking about who are we around designing mission, vision, values. We have then a whole curriculum about who do you hire and how do you hire and how do you pay and how do you level and how do you do org design and how do you manage underperformance. We could talk for hours and hours about all that. But I would say, if I'm going to answer your question, it starts off from that nugget of, who am I as a leader? Without that self-awareness, both on strengths and weaknesses, I don't think any company can.
Now that you brought up founders, one of the things that I've seen over the past decade and working in late stage has been, there's a lot of title inflation early on. And some of those leaders that may be a senior director at the early stages, there's a shelf life. They may not have the experience to scale for IPO readiness. And having a CEO or founder make those clinical decisions of when is it time to part ways and bring in the right expertise is an area that I've seen founders need coaching with to make those clinical decisions. But what other advice would you have for a founder? What's one key thing that you're consistently giving?
Yeah. So Ryan Dennehy is a serial entrepreneur and founder. He is the CEO of Electric AI in the primary portfolio. He spoke to our entire firm about this. And this takes a lot of humility and self-awareness. So I know this isn't easy. But what he said was when he reached a certain level of scale, what he said was like, if the board were to fire me, who would they go out and recruit? Who would that person be? And what would they do if they joined this company as CEO? And then he said, and then I went and became that person. Right? So it's almost taking yourself out of it and thinking about the business with objectivity, which is, like I said, kudos to him, because that is really hard. Your company is your baby. There's so much wrapped up in it, both personally and professionally, your reputation, your self-esteem, your confidence, your relationships. Right? There's so much wrapped up in it. But I think what's enabled someone like Ryan to be a serial entrepreneur, to be able to scale Electric from a team of one all the way to what it is today, and to remain the CEO is because he was able to think in that.
And those are few and far in between, but that self-reflection, that humility can really go a long way, not in just a founder's career, but in all of our careers. Rebecca, we'll go here towards the final closing. And a couple quick fire questions for you. First would be, what would you have liked to know when you started in VC that you now know today?
I think there is this power of both giving and getting in venture. So I think everyone in venture is looking for the next thing because you're always investing. So it's like when you meet people, what are you giving them in terms of making them better? And then also thinking of maximizing every relationship and connection. Also, how can I make this worthwhile for both of us? So often, like we miss opportunities to really like genuinely connect with people we're dealing with every day.
That is fantastic. When it comes to AI, what's your view? Is the hype real?
Yeah, I think absolutely. But I think it's also going to become just core to how every product is built. I think there are obviously AI tools, but in every product that anyone is building, whether it was a product from 10 years ago or a product 10 years from now, like AI is just now core in the way we do all work. Just like when we move, it was any platform shift, like when we move to having mobile or when we move to moving online, like it just becomes part of every day. So while today it feels new and hype, I think for my kids, it'd be like, well, yeah, of course. I can't believe there was a world without it.
That's fair. And when it comes to career advice, what's one sentence of the best career advice you'd give?
Yeah, I think so often we focus on like job title and company, but I would say the best career advice is surrounding yourself not just with smart people, but surround yourself with people who are investing in your growth. Because the best way, I think, to grow and advance in your career is to be with people who really take the time to invest in you.
Yes. And one thing I would add on to that is my current CEO and I were talking about this, and it's focused on the impact that you're driving, not the title that you have, right?
Absolutely.
When it comes to all the books, you've already mentioned one, which will put in the description.
Yep.
What's another one you'd recommend?
Yeah, so definitely The Advantage by Pat Lencioni. It's an absolute favorite book. The other favorite book is the book Who by Randy Street and Jeff Smart. It's all about precision and data-driven recruitment.
Fascinating. I'm definitely going to look that one up. Listeners, both will be in the description, so you'll be able to find those. Final question. I think this will be the easiest. If people want to get connected with you, how do they do that?
Yeah, absolutely. I think LinkedIn is the best way to find me. I'm pretty active on LinkedIn, posting content, reading what other people write. So you can find me there.
Awesome. Rebecca, thank you for being on the podcast today.
Thank you for having me.
Thank you for listening to this episode of the TroopHR podcast. If you enjoyed this episode, we encourage you to subscribe and leave a 5-star rating. If you would like to learn more about our community, please visit TroopHR.com. In the meantime, keep living the dream.